your fuel is $10,000 a ton for eSAF, that is a 1% in your overall fuel mix, so it gets balanced out and doesn't really have an effect. But it allows the industry to start so that prices can start coming down.
Hello and welcome to another episode of Interviews with Experts. Today we are discussing one of the most monumental milestones in the global energy landscape, the shift towards commercial scale electro-sustainable aviation fuel, eSAF. We are joined by Mr. Blair Phelan, the Managing Director of Phelan Green Group. Phelan Green recently made major headlines globally after selecting Johnson Matthey Catalyst Technologies to power a landmark SAF facility in Saldanha Bay in South Africa. Blair, it is an absolute pleasure to have you with us today.
Thank you very much.
So, Blair, I want to start with your impressive journey, your professional journey. You have been a driving force within the Phelan Group for over 8 years now, advancing through various functional roles, to your current position as managing director. This deep, long-term institutional knowledge gives you a truly unique perspective on the company's evolution. Having spent more than 8 years serving in different positions across these groups, could you briefly share your professional journey and what inspired you to establish Phelan Green Group and pursue large-scale green hydrogen and eSAF developments?
Thank you. So what I would say is first and foremost for us is we're a family business. So right. I joined the business straight out of university. It's really been spearheaded by Blair Phelan, who's my father, but also our chairman. The business was founded in the early 2000s in the renewable space after our part of the family moved from cold and rainy Ireland to South Africa, where renewable energy is a much more viable play. And from there, we started in the renewable energy space in pure play solar. I joined the business after we had a few hundred megawatts installed in the ground already between South Africa and in India. And I was working very closely with, and I'm still working very closely with our chairman on what the next steps are and what the future developments are, because solar as a kind of a pure play energy is great, but you're limited by sunshine hours, and there's a lot of other hard to abate sectors that need greening and decarbonization. So over the last 8 years, I'd say we've been really developing over the last 4 years in the eSAF and e-fuels or hydrogen space. And we have developments now between South Africa, India, Egypt, Spain, and Ireland. And South Africa being our first main development, and that's because we've got a lot of on-the-ground knowledge, but also the world-class renewable energy that is here, which is the main requirement for green hydrogen and its derivatives. Right.
So, the Saldanha Bay project is among the world's first commercial scale eSAF facilities. So what convinced you that now is the right time to invest in synthetic aviation fuels?
Well, what I'd say is one of the main driving is the decarbonization of a hard to abate sector of the aviation sector, but also is the European and UK mandates that are in place to drive this sector. Those will penalize the fuel suppliers and airlines starting in 28 and 2030 if they don't procure the fuel, which allows for a business case that's quite strong for us to proceed in the investment of building a plant to produce the fuel, because of course nobody wants to pay a penalty. They would rather have the fuel and fulfill the mandate. And I think one of the big factors is for us is because we're a family business and we've got a strong resource and a balance sheet that allows us to develop these projects, we've been able to proceed with the project without and obviously with taking some risks, but without having to worry about all the external noise of changing of mandates or anything like that, which we now see will not happen. And so that's really been the driver for us is to be first in the space. We were one of the first or the first large-scale solar developer in South Africa with our first 75 megawatt solar plant in the early phases of the renewable energy program here. And it's really just about being a first mover in a space.
Right. So moving into this monumental next phase, now, what strategic role does the Phelan Green eSAF project play within your broader vision for renewable energy, green hydrogen, and industrial decarbonization?
Well, I think that first off, we want to be, and we are, a first mover in the space. There are others, but we see that you have to proceed with these things. We can't talk about them forever. We have to actually supply the fuel. And with our vast renewable energy knowledge, it's allowed us to move quite quickly because we see there's two sectors. There's your oil and gas sector, and then there's your renewable energy sector. And one side knows a lot about the refining business, and one side knows a lot about putting together millions of solar panels on a piece of land to produce energy, which is quite a challenge, and managing that energy. So for us, we are still very invested in our solar business. We are working in the battery space also, but we really see that becoming a world leader in cost-effective e-fuels is where our future lies.
Okay. So let's talk about the big news. Phelan Green has finalized major licensing and engineering agreements with Johnson Matthey to deploy their technologies, the proprietary technologies like hydrogen and FT cans. Right? This is a massive multi-billion dollars initiatives. So could you provide an overview of the Saldanha Bay eSAF project and the key milestone expected before construction begins in 2026?
Yeah, so the project is, and I'm not an engineer, so I look at things a bit differently to how engineers would look at it. But the project is broken up into three main, as we would call it, licensors, or three main parts to the project. So we have our first main element, which is the electrolysis, so green hydrogen production. For that, we've selected Sungrow, and we've signed agreements and licenses with them for their alkaline electrolysis. And the main reason for that is we've been partners with Sungrow for the last 15 years between our different energy facilities. We work very well with them, but also it's about being cost effective and also having the track record of delivery. They're one of the largest power electronic companies out of China, and so we've selected them for our phase one of 200 megawatts of electrolysis. From there, we move into what we call the processing plant, but it's, I would say, more the refinery, which is where you have your reverse water gas Fischer Tropsch, where we have licensed with Johnson Matthey. But then how that is working is we have an overarching Honeywell deal where Honeywell is providing us a plant that is prefabricated, including the Johnson & Matthey scope, so the Johnson & Matthey reverse water gas and Fischer Tropsch, and then Honeywell has their proprietary refining technology at the end. But Honeywell, as a very large equipment and technology provider, will take the responsibility for modularizing the whole plant and then delivering it to site on skids. I think for our first phase to produce 35,000 tons, it's around 130 skid units, which allows for a lot more efficiency in construction, allows us to deliver the plant quicker. The plant is being constructed in a controlled environment, which will allow and control it, where will alleviate a lot of the risks that there would be in a stick build environment where you're building on site and everything's exposed to the elements. So the plant is really of three key technology suppliers, which they're all very, very reputable and trustworthy companies in their own right, which is why we've gone with them, with a multitude of factors around that. Obviously, the engineering team would be able to go into a lot more detail of why each element is better, but yes.
Right. So Blair, we have learned and we have witnessed that many SAF projects globally remain at the feasibility stage. So from your perspective, what are the biggest technical, financial, and regulatory challenges in moving from concept to commercial scale execution?
So we have a saying in our office, we call it the 120-side Rubik's Cube of delivering one of these plants. So the challenge we've seen is that because you've got these two industries meeting of renewable energy and refining or gas and liquid processes, putting them all together is a significant challenge. On the renewable energy side, you're dealing with gigawatts of energy from solar, wind, and batteries, which you're having to manage essentially like a grid. Managing that much energy is very challenging. And then you've got to manage, operate equipment on the other side that has traditionally just been run 24/7 at full tilt. And that brings in its own complexities when you need to turn certain elements down. And it's really a very, very difficult management to pull it all together. And we see that being one of the main things of challenges in the market is a lot of the developers have one side of the expertise, whereas then in terms of financial, I think there's a lot of hurdles to jump to get to the point of going into a project where you're in the final stages of financial close with lenders and to delivery on site, and that is the hurdle of this is a very expensive industry to get to that point. So fortunately for us, we've been able to fund all of that development ourselves off of our internal resources. It's not a cheap exercise. You're not building a house. You're building a very, very large liquids fuel plant. And then in terms of regulatory, we've seen it firm up quite a bit over the last few months, and a very big shift in the market, especially when it comes to the European Union and Germany doubling down on the mandates and adding top-ups to them. Is there was a lot in the industry who were pushing to relax the mandates and try and push it out, as always happens when rules and regulations and mandates are put in place. And now that we've seen the kind of doubling down in Europe, we think that this will make the industry move a lot quicker. There was a lot of uncertainty prior to the last 4 months. So I would say those are the main key things. It takes a large investment to get to a point to proceed. It takes risk taking to allow yourself to proceed with slight uncertainty and mandates, which are now certain, and then mixing two different industries together at a large scale can also be challenging.
Now this facility is expected to eventually produce around 140k tons. Correct me if I'm wrong, of eSAF annually. What operational or supply chain variables will determine the success of the future expansion phases?
So for us, it's about getting the first 35,000 tons built at the moment. I think that we can talk about the large expansions, and we have a team working on that, developing that, and that's definitely going to happen. But for us, is delivering the first 35 KT allows us to then move ahead quite significantly quicker with the latter part. I think that one of the points to raise is that we have very, very good energy resources in South Africa, but we don't have the supports in terms of monetary supports that we're seeing in the EU and places like that. So we have to go on and get on with it and deliver the plant. For the later phases, I think that, and the later developments in other locations, we will be guided where we get the most support, because we have to stay competitive with the others who are receiving these large supports. And the success of the 35,000 tons is really what's gonna drive the next phases. And we're predicting that we have a 3-phase build. So the first phase is 35 KT, and then it goes up over 2 more phases to 140. We're predicting that once we deliver the first 35 KT, we will be building the rest of the phase in one go after that.
Okay. So the location of the plant in Saldanha Bay is highly strategic. Green hydrogen and renewable power are central to the overall cost equation. So how do you assess South Africa's ability to become a global competitive producer of green hydrogen? And what role will electricity pricing play in determining the long-term viability of your exports?
So what I would say is electricity prices is a significant factor in eSAF production or any hydrogen power to X production, with energy taking around more than 60% of your input cost. We see that South Africa definitely is on the map to be one of the world leaders in it. There are a few challenges, as there are everywhere, and one of those is definitely grid costs. So we're fortunate that in our first phase, quite a significant amount of our energy is being produced co-located with the production plant. But as we expand it out, the profiles of energy from different parts of the country will come into play quite a lot more, with the northern parts of the country having better wind resources and so on. So we're looking and hoping to see that there is work done on reductions in grid costs, especially for new industries like hydrogen, to get it off the ground and make sure we're competitive with the rest of the world. But yeah, energy prices will play a large factor into it. We obviously build most of the energy ourselves, so we are in control of that. But it's really about the grid costs that are going to be a major factor in it. But we think that South Africa is on top of that, and it will be one of the world leaders in e-fuels production. Right.
Now, securing reliable CO2 feedstock is another critical component. How is Phelan Green approaching carbon sourcing to ensure sustainable synthetic fuel production at scale?
So what I would say on that is, and we've got some proprietary ways we're doing it, but one of our main feedstocks is in South Africa, by law, you have to remove off of your land alien and invasive species. So species of plants and trees that are drawing significant amounts of water from the ground, killing other vegetation, and they grow at a rapid pace. So one of our key feedstocks will be alien invasive species, which we will be using, and it'll be burnt in a biomass boiler, and all of the CO2 will be captured directly from that. And then we have various other sources, but the real baseload is solving one problem of alien invasive species, where in the Western Cape, where our plant is located, there's about 2 million tons of that growing per year. And it's a major issue that nobody's been really able to get a handle on. But by law in South Africa, you have to remove it from your land. So we see that as being a very long-term and sustainable feedstock of CO2.
Okay. So your initial phase aims to supply the European Union and United Kingdom markets, potentially covering up to 6% of the eSAF volumes. They need to hit their 2030 sustainability mandates. Now, airlines globally have committed to ambitious net zero targets. do you believe the current pipeline of eSAF projects is sufficient to meet projected demand by 2030?
I don't. We're working to try and fulfill some of it. We don't believe that the project pipeline will meet the mandate. I was at a SAF Congress conference about a month ago now, and I was in an S&P Global presentation, and they are predicting in 2030 there's going to be a 550,000 ton shortage of the fuel. Now we're seeing that also. I think that there will be a lag in supply, and one of the main reasons for that was the airlines, or maybe less so the airlines, maybe a lot more the fuel suppliers who are the mandated parties, sitting on the fence a little bit. And I think that we're seeing a very different mindset and different approach over the last few months, since we've had doubling down on the regulations and the mandates in the EU and in the UK. So there will be a lag, definitely. There will be people paying the penalty pricing, but I think that that's what happens when you push against something and it doesn't, you don't succeed in it. I think that there was a lot of the industry lobbying against the mandates, and now they're in a situation where they're going to have to pay the price for that. So we're there to fulfill supply. We're seeing a different approach, like I said, from the mandated parties, and we're working, and that's the space we like to be in.
Right. So tell me, Blair, how do you see eSAF competing with other sustainable aviation fuel pathways, like HEFA and alcohol to jet technologies over the coming decade?
Well, obviously there, and you'll know from the mandates, there's a large requirement for the other SAF pathways, your HEFAs, your alcohol to jets, but eSAF is really the only long-term sustainable option. A lot of your SAF pathways, you come into a food versus fuel conflict. So using land where crops and food could be grown, and producing feedstocks to produce fuels. Now, obviously, there needs to be a transition, and that's why those fuels have their way in the transition. But eSAF really is the long-term only option. Okay.
Now, I want to dedicate some time to the critical dynamics of pricing and commercials. Now, today, eSAF remains considerably more expensive than conventional jet fuel. How significantly will the prices of green hydrogen, renewable electricity, and captured CO2 influence the final production cost of eSAF?
Well, I think that if we look at across the chain from your start of electricity, renewable electricity is really quite at its bottom, I would say. Solar panels are as cheap as they've ever been, or as inexpensive as they've ever been. I think it's along the rest of the chain where equipment costs and operations, once their scale reached, where costs will come down. I think that the way the mandates are structured is very clever for that, is that you're spurring the industry, but let's say your fuel is $10,000 a ton for eSAF, that is a 1% in your overall fuel mix, so it gets balanced out and doesn't really have an effect. But it allows the industry to start so that prices can start coming down as supply and production are increasing.
Okay. So beyond capital investment, how important are government incentives, carbon pricing mechanisms, airline offtake agreements, and European SAF mandates in making projects like Saldanha Bay financially viable?
What I'd say is that without the mandates to start, you would not be viable, because you need you need that push from the other side of the industry to push them into buying the fuel, the suppliers to supply the airlines. You can't subsidize things forever. That doesn't work. But I think that pushing the other way around to make it that you need to use some of the fuel allows the business case to then be firm, because at the end of the day, you can't fund a project in project finance without some sort of long-term offtake or some sort of commitment to procuring the fuel from the producer. So the mandates really are where I see the push in the industry, or the driver in the industry lying.
Right. So conventional aviation fuel prices are closely linked to crude oil markets. From a commercial standpoint, how do fluctuations in crude oil prices affect the long-term business case and price competitiveness for synthetic aviation fuel?
Well, I think that when you look at synthetic aviation fuel, it's a very capex heavy investment to put up a plant, but then your costs over the life of the project are quite manageable and quite low in comparison. So you're very easily able to fix a price or have a very clear price curve on the fuel, whereas fossil fuel based fuels or crude oil based fuels is, as we've seen over the last few weeks or a few months, I should say, can be all over the place. So I think it does allow for some certainty. When we talk to people to sell fuel, we're looking to do it at a fixed price for 10 to 15 years. I think that there are elements of slight increases in that, but really you're able to map out what it's going to cost you over a period of time, and then you can build your business around that. Whereas, as like I said, we've seen over the last few months, airlines have been struggling, and aviation fuel prices have doubled and tripled overnight. So really, this is a way that we can map it out straightforward and keep price volatility really quite narrow.
Right. So Blair, to close out our discussion, I want to touch on the long-term horizon and the core takeaways for our global audience. If we were having this conversation in 2030, what milestones would demonstrate that the global SAF industry has successfully moved beyond the early adoption phase and achieved true commercial scale?
Well, what I would say is firstly, you would have enough supply to meet the mandated demand. I think that and how that will be watched is people won't be paying penalties. So that is really one of them. And I think that also the costs of the plants will come down, but also the ease of funding the plants will also, like in the early days of solar, you had to really demonstrate to lenders how a solar facility would work and have a 20 to 25 year lifetime. I feel like in a lot of spaces now, that's where the eSAF industry is this going to work, or how is this going to work? Whereas now, if I look at solar 20 years on from then, lenders fund the projects very, very, very easily. As long as the fundamentals are right, then they're happy with it. So I think that the lending market will become a lot more comfortable with it, but then also the demand market will be fulfilled.
Right. Finally, what closing message or call to action would you like to share with the policymakers, airlines, investors, and technology providers working to accelerate the global transition towards sustainable aviation fuels?
Well, what I would say is, and I think we're in a good space at the moment in the e-fuels industry because of the certainty that's now been doubled down on in the EU on the mandates. But I really think it is these projects take a lot of time. We've been developing this project for 4 years, and we're reaching site now in September this year. I think that that you need certainty on the rules and regulations so that businesses can be built for it. I think that when there's uncertainty, nobody moves, and then that's how we end up with a shortage that's projected for 2030. If the policymakers and the lawmakers were very clear about this 3 years ago, there'd be projects operating today, in my mind. But we are where we are, and I think we're on a good trajectory forwards, and we'll be ready to supply first eSAF from our plant in Q1 of 2029 and to the EU in the early 2030s, in 2030.
Okay. So, Blair, your unique transition from building out green energy portfolios internally over the last 8 years to executing one of the most prominent commercial eSAF projects in the world is truly inspiring. Thank you for sharing your time and insights with ChemAnalyst today. We look forward to watching the groundbreak in late 2026. Thank you very much.
Thank you very much for your time.